please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, the big story that we are tracking at this hour, Finance Minister Arun Jaitley is unwell and therefore working from home. He has tweeted, and I quote, "I'm being treated for kidney-related problems and certain infections that I have contracted. I'm therefore currently working from a controlled environment at home. The future course of my treatment would be determined by doctors who are treating me." End of quote. That is the Finance Minister. We wish him a speedy recovery. Now, we caught up with BJP's Rajya Sabha MP GVL Narasimha Rao, who said that the Finance Minister is expected to stay away from office for a couple of weeks, and that the party has had an informal discussion about this, but he believes that at this point in time, a stand-in is not being looked at.
Certainly, we wish him a very speedy recovery. I suppose, I hope that he doesn't have to be away from his duties for longer than maybe a couple of weeks. So that should really not cause any disturbance to the functioning of the ministry per se. So and in any case, we have junior ministers of state supporting the finance minister in that ministry. So therefore, there is no possibility of any work coming to a standstill.
So the Finance Minister there confirming that he is currently undergoing treatment for kidney ailment. Now on to news just coming in. The only airline to have expressed interest in bidding for Air India seems to be backtracking. IndiGo's President Aditya Ghosh has informed investors, and I quote, "We do not believe that we have the capability to take on the task of acquiring and successfully turning around all of Air India's airline operations." End of quote. Joining me now is Ashpreet Sethi with the details. So Ashpreet, it looks like IndiGo is not interested any longer. They'd always made it clear that they were interested in the international operations, but the government has made it clear that it's going to be a combined sale as per the expression of interest that's been put in the public domain. So what else has Aditya Ghosh said?
Well, yes, absolutely. In fact, it is the only airline which has shown expression of interest formally and had written to the Aviation Ministry saying that they are interested just in the international operations. However, going by the statement that the IndiGo has issued today, in fact, a lot of investors had put in queries, had asked the IndiGo management to clarify whether they are still interested after the EOI had come out in the public. Remember, we have been reporting for the longest time, and it is there in the EOI that domestic and international operations will not be sold separately. So what Ghosh is saying right now to investors is that from day one we have been interested in international operations. However, it is not part of the expression of interest, and as you were quoting him, that we have communicated, we do not believe that we have the capability to take on the task of acquiring and successfully turning around all of Air India's operations. Now, what we pick up also is that IndiGo has filed a BSc filing. Of course, they have explained as to what were the queries. We'll get you more updates as soon as we get a hand on that filing.
Okay, Ashpreet, appreciate you joining us. Let's go across now to Kapil Kaul from Kapa. Kapil, IndiGo, Aditya Ghosh making it clear that, look, it's the international operations that we were interested in, and we may not have the capability to turn around Air India's combined domestic and international operations, and hence the only interested party that had put in an unsolicited expression of interest seems to be opting out of the race.
Well, Shreen, I think it's an excellent decision. IndiGo is going through game-changing expansion plans. I call it a once-in-a-generation expansion plans. Roughly about 60-65 aircraft to be added in one fiscal. For them to have taken such a complex and a very, very challenging operation and simultaneously execute their own business plan was near impossible. We spoke at your show, in your show, when IndiGo had expressed unsolicited interest, and we said that this is a very unwise decision. I'm happy there is a course correction. It's good for their business, good for their investors and shareholders. So I think it's an excellent decision. I think, and I was not expecting government to break domestic and international, and for IndiGo to take on Air India along with executing a massive expansion plan was impossible. So I think a good decision.
So you're saying that it's a good decision on Indigo's part, and the Indigo's investors should be relieved that they've decided perhaps not to go through with this. But where does this leave Air India then, Kapil? I mean, you know, this is a complex and a complicated business. There is, of course, the complication of having the government in some form or fashion present there, whether they continue to hold on to that stake or they bring in a government-owned financial institution to hold that stake is a different matter altogether. But, you know, where do you really see the real interest coming in now for Air India?
So I think the expression of interest, my assessment is still an excellent document in the sense that it's the best government could do to balance many factors that they need to balance. And the document expresses that very clearly. I still feel that Air India was not meant for Indigo. But Air India could be something very valuable for Vistara. Either they come from Tata Singapore, because it will overnight create another Singapore Airlines. Similarly for Jet, to be honest with you, it's too strategic for them to have a very strong competitor in private hands in Air India. So I still believe that there will be a lot of interest. Our initial estimate was 4 to 6, which included all the 4 Indian carriers. But this changes the game completely, because if you look at it, the only well-capitalized and airline which could have the wherewithal to execute financially Air India was Indigo. Rest of the carriers don't have the money. And if we take Vistara's bid through Tata Singapore, that would be the only one which perhaps could qualify. So we'll have to wait and see. But I think in Indigo's interest, it's a very good decision. But overall bid, I still believe that there will be a significant interest.
You still believe that there will be significant interest.
Yes.
But Kapil, the possibility of a large Indian conglomerate perhaps tying up with a foreign carrier, I mean, outside, of course, of the Tata Vistara obvious choice, do you think that that possibility seems now more and more realistic?
Yes, I would think so. Yes, I would think so. Tata Singapore would be one consortium, and you would find maybe possibly 1 or 2 more consortiums. But after Indigo's decision to exit, I'm not very sure whether the other carriers, perhaps except Jet, would be interested. Vistara, I'm not qualifying it. I'm qualifying Vistara through Tata Singapore. So this basically changes the dynamic a bit. But I still believe that it's an excellent opportunity for somebody like Tata Singapore to be in a market which is potentially going to grow for about 3 to 4 decades and more. It's an excellent opportunity, but not good for. It was not meant for Indigo, and I think Indigo has taken a wise decision.
A wise decision taken by Indigo to opt out of the race for Air India. Kapil Kaul, appreciate you joining us at this hour with that take on the decision that's been taken now by Indigo Airlines. There's plenty more to talk about. Time for a break. When we return, the Monetary Policy Committee votes 5-1 in favour of a status quo, but with a twist. Details when we return.
Welcome back. Now, the top story this evening, the Monetary Policy Committee headed by RBI Governor Urjit Patel has voted 5-1 in favour of a status quo policy. However, it has packed a lot of surprises in its main statement. So let me quickly take you through some of those highlights that are necessary to understand. Now, the Monetary Policy Panel has left the repo rate unchanged at 6%. Now, this decision is on expected lines, but RBI has sprung a surprise, striking a dovish tone on its inflation front. Now, the committee has cut the April to September inflation forecast from a range of 5.1 to 5.5% to a range of 4.7 to 5.1%. Forecast for the second half of the fiscal has also been cut from a range of 4.5 to 4.6 to 4.4%. However, the panel added that risks to inflation were tilted to the upside on the growth front. The Monetary Policy Panel has predicted a GDP growth rate of about 7.4% for the current fiscal. The other big news from the RBI today is on the storage of payment system data. The central bank has now made it mandatory that all payment system operators ensure that data related to payment systems operated by them are stored only in India within a period of 6 months. Now, the central bank has also barred virtual currency transaction by RBI regulated entities. Those entities which already provide such services will have to stop it within a time specified by the RBI. Also, implementation of Indian accounting standards for banks has been postponed by 1 year. Scheduled banks were expected to switch to the new accounting standards from the 1st of April. However, it has been deferred as it needs certain legislative changes.
International crude oil prices have become volatile, with a distinct hardening bias from the second half of March. Moreover, aggregate demand is expected to strengthen during the course of 2018-19. A normal monsoon and effective food supply management by the government was seen as mitigating factors. Overall, the MPC assessed the risks to inflation as tilted to the upside.
Okay, that is the governor in today's monetary policy announcement. But let's move on and get you the market action of the day. Easing trade tensions and a surprisingly dovish monetary policy stance fueled a huge rally on the Lal Street. So look at the sea of green on your screens, with markets seeing a healthy gains across all sectors. The Nifty, as you can see, opened higher and rallied further after RBI's dovish stance. So that index basically rallied almost 2% by the end of the day. The Sensex rallied more than 550 points. Bank stocks outperformed today, with that index rallying more than 2.5%. Mid-caps also closed about 2% in the green. But from equity markets, let's go on to our ongoing investigative series. On to the latest development in the ICICI Bank Videocon case. The CBI has claimed that it is questioning Rajiv Kochar, Chanda Kochar's brother-in-law, in its Mumbai office. Now, the CBI's probe has shown that ICICI Bank had mandated a Vista Group to restructure deals worth over $1.5 billion for 7 companies over 6 years. That's what the CBI is claiming at this point in time. Utkarsh Chaturvedi is here with details. Utkarsh, you were the first to break the story. What exactly is CBI saying? And, you know, in terms of the investigation, where have things reached right now? How have they actually detained Rajiv Kochar when he wasn't mentioned in the original PE?
Well, Kritika, a bit surprising here given the fact that he was not even mentioned in the PE. The FIR at this moment of time is not yet being filed, and detaining really Rajiv Kochar when he was really boarding a flight to Singapore is a bit shocking in the move to CBI. But what we are picking up is that CBI believes that all the deals which Vista Advisory was doing, which was somewhere around $1.5 billion, and there were 7 companies which they served in 6 years. All of them were mandated by ICICI Bank, and this is what CBI is probing at this point of time. What we pick up from our sources is that it is around 4 o'clock when the questioning started. It is 8 at this point of time, and what we are picking up is that Rajiv Kochar is still being questioned in the CBI headquarters in Mumbai, right behind me. So we will have to wait and watch how long does this questioning goes, and as you said, we'll have to really see that whether CBI really finds anything substantial, and if they do, will they file an FIR in this case?
Okay, fair enough. That will be crucial to see how exactly this is taken forward. But Utkarsh, thanks for joining in with that. We'll have Utkarsh back as and when anything progresses on that front. But let's move on to another critical story. The Central Board of Direct Taxes has formed a working group that will look into the tax risks that high net worth individuals pose to the country when they actually migrate out of India. So the CBDT is alarmed because they feel that most high net worth individuals shift to other countries and pose themselves as NRIs to avoid paying higher taxes, even though they may or may not have strong personal and economic ties in India. In fact, talking to Shireen Bhan last month at Network 80's Rising India Summit, Morgan Stanley's Ruchi Sharma had also raised an alarm on the large-scale migration of millionaires from India. Hear out exactly what he had to say.
Last year, 7,000 millionaires left this country, the largest number in recent times. The year before that, it was 4,000. So the number is going up of the number of millionaires leaving this country. Foreign investment is important, but it's really domestic sort of participation, domestic investors who sort of make a nation going forward. So I think that, to me, this has to be really sort of looked into, that why are so many millionaires leaving this country? And if you're happy about it because you think this is part of the anti-corruption drive, fair enough. But when the number is the highest in the world, at least as a share of total millionaires leaving the country, that should be a cause for concern.
All right, moving on to the big court action of the day. Binani Simmons' proposed out-of-court settlement plan has cleared another hurdle. The National Company Law Appellate Tribunal today refused Dalmia Bharat's plea seeking stay on the settlement order. However, the court has allowed insolvency proceedings to continue simultaneously. Ashmit Kumar is here with details. Ashmit, it is a very clear relief for Binani, but what does this mean in terms of the final sale and who actually emerges as a front runner?
Right, so can there be an out-of-court settlement as far as the Benani case is concerned? That was the big question before the NCLAT, especially after Dalmia Bharat had moved a very clear application explicitly seeking a stay on the order of the NCLAT that had provided for such an arrangement, for such an out-of-court settlement. Dalmia Bharat's counsel essentially argued that the IBC process must be respected. It should not be done away with in this shape and form, and that once the insolvency application is admitted, there should be no room for any other form of settlement, and that Benani is trying to short-circuit this entire process. Now, the NCLAT didn't quite seem impressed with these arguments. The NCLAT has refused to grant that prayer, has refused to grant that demand. Instead, what the NCLAT has done is that it has allowed for simultaneously the resolution proceedings to continue unabated as per section 3031 in NCLT. Now, what this effectively does is that while it keeps the door open as far as resolution is concerned, it also keeps the door open. There's a foot in the door as far as the out-of-settlement route is also concerned. So as of now, both are available, and the NCLAT not seeing it fit to grant a stay on its own order which had provided for such an out-of-court settlement. Back to you.
Okay, Ashmit, but hang in there. The other big case at the Supreme Court, of course, today was Reliance Communications' plea challenging the stay order on the sale of its assets to Reliance Jio. The Apex Court has basically refused to lift the stay order on sale of its tower assets, but has allowed the company to sell other assets. So what does this exactly mean for the company? Put this into perspective.
Well, it was a day of heated exchanges at the Apex Court, but the big takeaway as far as this deal is concerned is that the green signal, the green flags have not been shown yet by the Apex Court. The decks haven't been cleared as of yet by the Apex Court. Now, let's keep in mind that there are two simultaneous cases being heard by the Apex Court. The first is a stay order issued by the Bombay High Court. Bombay High Court had stayed sale of any and all assets of RCom. The second case is the stay order by the NCLT. The NCLT had stayed only the sale of its star assets. Now, both these cases, its proceedings, both of them are in challenge before the Apex Court. The Supreme Court, however, bifurcated between the two cases. With respect to the Bombay High Court case, what the Apex Court has done is that it has vacated the stay and allowed for sale of assets of RCom. But while that order did come, let's also keep in mind the second case, the NCLT order which stays the sale of tower assets. In response to that, the Apex Court has said that RCom should consider moving the NCLAT before having moved the Apex Court, and in doing so, not altering the NCLT stay order, so that stay on sale of tower assets remains. Now, while in theory this does mean that the non-tower assets can be sold by virtue of the Bombay High Court order having been vacated, let's also keep in mind that the sale, the way it has been envisioned between RCom and Reliance Jio, is a block deal that also includes the tower assets. So as of now, it would appear that no green signal has been given to the RCom-Jio deal. The next port of call as far as RCom is concerned will be the NCLAT. Back to you.
Okay, Ashmit, we will leave it at that. Thank you for joining in with that. Let's move on. Star India has won television and digital broadcasting rights for Indian cricket teams' domestic matches for the next 5 years. And in a first of its kind e-auction, Star has retained rights for television broadcasting of domestic matches and has also won the digital rights for the first time, beating the likes of Jio, Google and Facebook, among others. Now, Star India will shell out a little over 6,100 crore rupees for the 5-year deal. This is 60% more than what it paid for 5 years when it won the BCCI contract for television rights alone in 2013. This effectively means the Star India will be shelling out 60 crore rupees on average for every cricket match. And with that, it's time to wrap up this edition of What's All. Thank you so much for watching. The Monetary Policy Committee has voted 5-1 in favour of a status quo policy.